Hi, I'm DJ Bibb with Fidelity National Title, and welcome to Title Talk. The topic of this episode is what is title insurance? Through this discussion, we're going to address what is title insurance, what types of policies are there, is it required by law, what does it cover, who pays for it, and do I really need it? So what is title insurance? Well, I've always thought of title insurance as being both a product and a service. It's a product in that it's an actual insurance policy that protects the owner of a piece of real property from any liens, encumbrances, or claims made by others to having their own interest in the piece of real property. It guarantees that the seller does in fact have the right to sell the property and that any liens and encumbrances associated with them or any other previous owners are no longer attached to the property upon closing. These liens and encumbrances are often in the form of old loans, judgments, tax, or child support liens, and claims of ownership interest can often be in the form of easements, such as utility easements or maybe a private party easement with a neighbor, but they can also be from a previous owner's long-lost relative or former spouse. So it's very important to protect against these items. Now, title insurance is also a service. It's a service in the fact that the title company does a background check on the property, makes all necessary payoffs, reviews and records the documents, and guarantees that the transaction was closed correctly. Now, there are two general types of title policies. There are owner's policies and there are lender's policies. An owner's policy is the policy that protects the property from any claims made by others to having rights or interests of the property. This policy is issued for a one-time fee upon the purchase of the home and protects the property owner for the entire length of time that they own the property. If there is a loan on the property, whether through purchase or refinance, there will also be a lender's policy. This policy protects that lender's interest in the property, mainly their loan's position. That policy is issued upon closing of the loan for a one-time fee and protects that lender until the loan is paid off. Now, title insurance is not required by law or any other such regulation. However, it is an extremely good idea, and in fact, very few transactions take place without it. And if a loan is being taken out on a property, almost every institutional lender and most private lenders will require it before funding the loan. Now, who pays for all of this? Well, practices vary state to state and county to county. But here in Southern California, it is customary for the seller to pay for the owner's policy as a way of delivering clear title to the buyer. Just like it is the buyer's or the borrower's responsibility to pay for the lender's policy as a way of protecting their lender. So you might be wondering, is this something I really need? Well, that's a personal choice. But remember this, title companies pay claims and take losses all the time. They are huge financial institutions designed to take these hits. The average property owner is not. Well, that wraps up this edition of Title Talk with DJ Bibb. Thank you for tuning in. I hope you tune into other episodes. And remember, submit any questions you like to djbibb@fnf.com. Thank you.